How do you see sentiment in the Lal Street, in particular today and over the next 1 year or so? What are the positives that have emerged over the last 6 months?
Yeah, good afternoon to everyone. Indeed, today is a kind of an important day. Okay, not only for the markets, but also for the broader outlook from here, right? So the domestic geopolitical risk, which was one of the factors which was emerging and kind of weighing down the market, I think that seems to have kind of abated. Also, what we hear is that Russia, Ukraine also, okay, they are also looking at some kind of a ceasefire. If that also works out, and I think on the global front also, you will see the risk premium which was there because of the geopolitical risk will kind of come down. And then, more importantly, I think the developments, okay, since the Trump announced his tariffs, right? The markets were taken by the shock because of the quantum of tariffs which was there. But since then, we have seen things have kind of mellowed down. And Mr. Trump, he has been able to, he's trying to negotiate deals with various countries. We saw a trade deal with the UK a few days back. And today, most importantly, with China, okay, which is the largest trading partner of the US, we've seen that they have come to a terms which the tariffs now with 30% tariffs which was there, which is kind of much better than what we were expecting. So I think that would really be positive even from a US perspective in terms of the fears which were there that they could lead to a lot of disruption from the supply side. You could see inflation go up. So I think given all these factors, I think some of the concerns which were there, I think those are kind of easing off. And I think the market, for India perspective, if you look at it, so we are coming out from a slowdown, right? So last year, FY25 was a year of a slowdown for us, both from a economic perspective as well as from an earnings growth perspective for the companies. And that was because of the tighter monetary policy which was there, the government spending which was lower, and all these factors. And as we step into this fiscal year, right, we've seen that on both these conditions, the financial conditions are now much easier. The RBI policy, what we've seen the last couple of policies, has been very accommodative and supportive for domestic growth. More importantly, the liquidity situation, which was negative around 2-3 months back, now that's well into very positive territory. And we have seen rate cuts also, which have happened to rate cuts, and more to follow. At least another 2 more rate cuts is what we look into it. And as a result of that, also the banking system, which is getting throttled a bit, not only because of tighter liquidity, but also because of the restrictive conditions which were the regulatory, those have also been kind of eased off by the RBI. So I think all these factors should help us to growth to slowly come back. And this year, I think we can expect earnings growth again to go back into double digits is what we would expect. And that should, I think, put the way for the markets, right, from here on to really scale new heights.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.